Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here this morning. Now, you know what? First thing we're going to talk about is Germany. Excuse me. Let's start the charts right here, and let's take a look at what's going on. Trump tariffs, threat on autos are stoking fears of a German recession. Well, you know what? Germany is actually already in a recession. They're just hovering right around the zero mark on the GDP. They need 3 consecutive months of negative GDP to be technically in a recession, and that's what's coming. Honest to goodness, I mean, it says German crisis, Europe's largest economy still faces impending recession. Now, I got a kick out of this article here by CNBC. It says, Germany could enter a recession, but this would actually be good for... I'm not even going to go there. That's so ridiculous a statement that this is actually good to have a recession that I'm not even going to go there and check out what they have to say, because I don't see any good coming out of a recession. Now, what's their answer? The central banks. With this modern monetary theory, what is their answer for a recession? Well, just print more money and get us out of recession. You know, but this is going with an idea that's something similar. It reminds me, it's silly to me, this modern monetary theory, this Keynesianism way of thinking, is as silly to me as somebody actually trying to lift themselves up and fly by their own bootstraps. It doesn't work that way. It only works in theory. Actually, what happens is you increase inflation. But you know, governments like to increase inflation. This is their way of robbing the money out of your bank account while it still sits in your bank account. But this will only go so far before people start to understand actually what's happening, and then they lose confidence in the purchasing power of their fiat currencies. And that's what's driving the rise of Bitcoin, by the way. But let's talk about right now Brexit and what's happening here with Brexit. And this doesn't bode well for Germany. It says the sheer Brexit fear has caused German exports to collapse. So right now, right while we're talking on other channels about a German recession, we see here that the German exports to Great Britain have fell by 11.4% in 2018, and now they've dropped by 15.4%. So German exports have dropped by 15.4% to the United Kingdom. They do an awful lot of exports to the United Kingdom. And, you know, if the United Kingdom is not receiving all these exports, it's a sign that the United Kingdom is going into a recession as well. About the only country that's barely holding their head above water is the United States of America. But there's all this talk about how the economy's so great. Trump, our economy is just booming. But then he says, yeah, but we got to do quantitative easing and we got to lower interest rates by 1%. He's front-running the real truth. That's the real truth about the economy. And he's front-running this to the Fed. You know, this is more than likely coming down the pike pretty soon. As soon as the market falls off, you know. And so let's get in there and let's take a look at what Carl Icahn's got to say about all this. You know, he says you can print money up to a point. So that's what they're doing right now. They're printing it up to a certain point, like a cliff edge. It's like pushing a car up to the edge of a cliff. You get away with it right up until it gets to the edge of the cliff, but if you push the car any further, it's going to fall off the cliff. He says, but after that point, it could become very dangerous. We don't want to hit a wall you can't recover from. Once you get into an inflationary spiral, it's very difficult to get out of it, and therein lies the danger. In other words, what he's basically saying is we're heading toward hyperinflation. It's very simple. So let's get a look at the markets today and see what's happening. We see that gold has been hammered. We see silver here has been hammered. Today, silver's down 5 cents so far today. They're able to hammer the prices of gold and silver using the paper trading, and this is what's been one of the things that's been helping them to kick the can down the road longer and keep us from going into this hyperinflation. Ultimately, it ends in hyperinflation, but profound inflation at first. This is what's been one of the things that's been holding it back. But you know, they can hold the price of gold and silver back, and they're displaying that to us, just how powerful they really are at holding the price and suppressing the price of gold and silver. But you know, this little beast right here, Bitcoin, the price is $54.36 today. You know, I don't know how well they're going to be at holding that back. You know, and when people see that asset class rising and everything else having problems, more people will come in. They don't care. They don't care that it's just a computer algorithm. You know, it's just a computer program. And what really is it? They don't care. They just see money. They see ka-ching goes off in their eyes. You see dollar signs, you know. Greed starts to hit, and Bitcoin could go into another hyper bubble, another super bubble. And this bubble could be beyond anything we could imagine, you know, of what it could do. But let's take a look. Silver's at $14.60 today, and let's take a look at gold. Gold's at $12.69. Man, they've smashed it lately. Really, it's down $7.30 on the day. So let's go back and take a look at Bitcoin. Bitcoin is $54.36. Let me refresh the chart. $54.61 just went up. it's constantly heating up hotter and hotter. Let's take a look at cryptocurrency market capitalizations today. And what we're looking at is $177 billion. Well, let me refresh the page. 176.793. 176.793 billion. That's 176.7 billion. 54.6 Bitcoin dominance. And we see most of the coins are up on the day. A few of them are down just marginally. But it's slowly heating up the Bitcoin market. I expect it to go along for a few months and then start to work its way back into a bubble again. That's what I'm expecting. There's an awful lot going long, an awful lot of big money going long right now in the Bitcoin. Let's take a look at the Dow Jones Industrial Average. And what we see is, let me refresh the page. It's up 4 points on the day. Oh, that's not much. It's just pretty much staying level today. 26,434. Let's take a look now at crude oil. Refresh the page. $1.59 down, 2.5% down. That's quite a little fall in crude oil prices. Let's take a look at U.S. Treasuries today. And we're seeing the long end of the yield curve is rising and the short end is falling. This tends to move us a little bit further away from our yield curve inversion, but we're still having our yield curve inversion. It's mostly the worst part of it is in the middle of the yield curve. Look at the U.S. 5-year, 2.32, compared to the U.S. 1-month, which is 2.41. There you see your yield curve inversion. So we still have it. 97.75 on the U.S. dollar index. 97.79 on the U.S. dollar index. Dollar's going up right now a little bit. Now, it was 98 last week. Just dropped back into the 97s. You know, it's been hovering around 95, 96, 97 for an awful long time now. Months and months and months. It's maintaining strength. The reason why the dollar's maintaining strength is several reasons. One is the currencies it's up against to make up the U.S. dollar index. They're all garbage. So you're kind of like picking the best piece of garbage out of a whole can of garbage. So that's one of the reasons, because of what it's being compared against. And another thing is the suppression of gold and silver, the manipulation of the markets. They've basically been kicking the can down the road for an awful long time now, and they're running out of road, though, at this point. And that's what Carl Icahn is pointing at. is the fact that you carry this on for too long, it's going to bite you in the bum, quite simply. And how it's going to do that is runaway inflation. And we're right at that inflection point now where I can see the runaway inflation coming pretty darn soon within the next few months. I know we've been waiting for it a long time to happen because we've known it's going to happen for a long time. And man, they've been good at staving it off for a long time. But they're reaching the point now where it's make or break time. They can't push it too much further. They're running out of road. Listen, thank you guys for listening to this market report, and we'll catch you again very, very soon. Bye-bye, guys.